Hi, and welcome to this morning's early global view. It is currently 6:30 a.m. U.S. Central Time on Monday, December 7th, 2015. And it's a very interesting week last week on the agony on Thursday and ecstasy on Friday. And that's in part because Mario Draghi sounded less aggressive on Thursday and then managed to embellish what he said at the ECB press conference on Friday morning. More on that shortly. So we have to ask, what does all this mean to the markets? And what we get is the U.S. S&P 500 future is currently up 5 at 2093.5. And that, of course, represents a swing back up toward the 2100 area resistance, which, as we noted, going into last week, Wednesday, has a tolerance of 2103. Much above that, historic areas up around 2120. And again, at the all-time futures high at 2132 are going to be your next key levels. As importantly, on Friday, the market pushed back above the old 2075 to 80 congestion area, which of course had held so well going back into the previous week, and then ultimately came dropping down through when it failed on Thursday. And it also violated the 2060 to 58 support, which was kind of a fresh Fibonacci sort of halfway level on Thursday, but then ratcheted back above it. You can see the higher opening on Friday, initially only around 2053, but then as the market began to digest the idea that even though the Fed was going to hike a quarter point, now likely on December 16th, that's going to be, of course, on Wednesday of on December 16th, Wednesday of next week, then we're going to see the market say, well, that's okay if that's in line with continued growth in the U.S. as the Fed has isolated. So your next lower support, even if you should get back below 2075.80 again, is reinstated at 2060 to 58. And we'll see the importance of that on the intermediate term charts as well. We also note that if the market remains up, whether or not it remains up on this higher opening today is kind of important, because as the market flatted out on Friday, the hourly MACD got right up into its upper runaway band again. If it should get out, much as it failed to do going back to last week Wednesday, if it should get out, then it could speak of a market that'll feed on itself and push above the 2100 area. And that pretty much does it for the short-term view of the S&P 500.